Great. All right, so we're ready to start? Perfect. Okay, so thank you so much for joining me tonight. I'm so excited to be here, especially because it is International Women's Day. So happy International Women's Day. There is no better night to do an event with women than tonight. So I think it's great. It's a celebration of women and empowerment, and it's everything that the Uptick stands for and tries to do to create a platform that makes something that's more of a topic that attracts more men more accessible to women. So perfect night for this tonight. So we're going to do a couple things tonight. So first, I'll tell you a little bit about me and how the Uptick came to be. We're also going to focus on why I'm so passionate about financial literacy. We will also talk a little bit about investing and why it's important to how to get started, why it's important to care, and we'll discuss the current market environment and try to really parse what's going on today and better understand it. We'll also leave you with some great tips too. Okay, so this is a little bit about me. So I'm Jamie Easton. I'm founder and CEO of a business called The Uptick. It's a media business that's aimed at empowering women to better understand business and finance. I spent a 20-year career on Wall Street before becoming an entrepreneur. I graduated from Penn. I was an econ major, so I wanted to highlight that to this group. And after I graduated, I joined Goldman Sachs. I was a junior analyst in equity research. And while I really enjoyed writing, what I enjoyed more was talking to clients on the phone and pitching ideas. And I quickly learned that there was actually a job for that, and that was called equity sales. So I spent the bulk of my career in sales, and in 2010, I was presented with this unique opportunity to join a prominent investment bank and help build an equities division from scratch. So it's really not that often that an entrepreneurial idea comes along at an investment bank or a bank that doesn't have a group that does, one of these main pillars. But here came along an investment bank that said, I want to do equities. And I joined as a founding partner of that group. Evercore then decided to merge with a business that they bought. And at the time, my CEO turned to me and said, could I run the investor relations function and help explain this complicated story to Wall Street? So I spent about 5 years in the role, and I loved what I did, but I had this burning passion to do more, and especially around the idea of female empowerment and financial education. So ultimately, I really wanted to impact how women interact with business news. And I was very involved in all these different women's initiatives and mentoring programs throughout my tenure on Wall Street. But I was really helping women that were already in finance stay in finance. And I wasn't doing anything to help a broader set of women get more comfortable with finance. And I felt like, we actually had to do something about this because it was such a problem that we were never fixing. So I thought that, to do this, it had to come from a woman. So I decided I'd step up to the challenge. So I was actually at a dinner party in 2018, and this idea sparked that I should leave Wall Street and do something. I was sitting with a few couples, and the topic of business news came up. And then some of the women turned to me and they said, oh, so what else is going on? And I was like, wait, why are they trying to change the conversation? This is like such an interesting thing that, everyone's talking about. And now I'm being asked about, any good yoga classes. I'm like, this is so crazy. So I felt like, women have come so far along in every other aspect, right? We're breaking barriers, we're breaking glass ceilings, we're doing so much. But when the topic of money and investing comes along, women are like, okay, that's not for me. I'm not a money person. And I think that all too often, women allow their partners to make major financial decisions for them. And I really fueled my passion when I hear all of this to do something to change it. So I left Wall Street in, I guess it was 2019. I left Evercore in February of 2020, January of 2020, I guess. I published my first newsletter, and it takes business news, it makes it more relatable. And the idea behind it was really when women start conversing more about finance, it opens up doors to all of these rich and important conversations that ultimately impact their financial futures. So I really liken it to more merging onto the highway, right? It's hard to really talk about um, what you want to invest in or where you should put your money if you have no idea what's going on in the market and you can't even talk about the basics. So, right, you can't drive 60 miles per hour before you learn how to get onto the highway. So what I try to do is get women to just take that step to get onto the highway, and then you can start going fast. Um, so so let's talk a little bit about financial literacy. So how many times have we read something or seen on TV, a scene play out where men think so little about a woman's financial knowledge that women get cut out of the conversation? So it even happens to me. I'm a finance professional. A year ago, I bought a new car. The car dealer asked when my husband would be by to sign the papers, and I'm not kidding. It actually happens to women all the time. And I said, if it's crazy that men feel that way about women, and I think that why it happens is because so many people do play into the stereotype of like, I don't get this, I don't understand, all of this is not for me. So when I first started with my business, my intention was to reach women my age and help them better understand finance. My message quickly began to resonate with college age women. Pre-COVID, I spoke at a couple college campuses. And after the world shifted virtually, we started to do more events like these. And I noticed it wasn't women that were just my age that felt left out. It was also so many young women who felt left out of the conversation. And the big difference, which I love this difference, is the college age women wanted to do something about it to change. They wanted to better themselves, and they didn't want to resign to the fact that, okay, I'm going to be 30 and 40 and maybe I'll learn how to manage my finances then. They really actually self-reflected and said, you know what? I'm open-minded, I'm going to grow and I'm going to learn this, and I'm not going to fall into that same trap as the generation before and the generation before. So I actually love that. And I love, the direction of where we're going. So let's look at kind of how we're doing. Well, this is what financial literacy is. So financial literacy, it's the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. The lack of these skills is called financial illiteracy, and that is what we truly, truly want to avoid. Let's go to the next up. It's really shocking when you look at trends and how women relate to finance. And, I think you see all of these stats, and, Credit Suisse found that female clients have 90% of their wealth in low yielding cash and fixed income. I mean, women don't really want to invest in the stock market. They're more afraid to take risks. And I think that part of that, 40% of women in the US are actually not invested in the stock market. And I find that to be shocking. And the reason why it's so shocking is because if you look at historic returns over time, the stock market averages about 10% per year of annual returns. And then when you add in compounding, how do you think that women fare relative to men when they're ready to retire if they're in all of these low yielding investments? And I don't have to tell you, it's really not good. But last week I read an interesting article. There was an article in the journal, and it talked about the whole Wall Street bets, Reddit, and what was going on. And, yes, I think a lot of women did avoid the crazy trading frenzy, and a lot of people lost a lot of money. It affected men more than women. But what was a problem is it really highlighted how women don't participate in markets. So women make up 51% of the US population. If you look at Robinhood users, about a third are women. So it definitely does not mimic what our society looks like, and women need to participate more. So women tend to be more conservative. They'd rather invest in bonds. They'd rather invest in a home. The stock market, I think most women would say it's too volatile. And cash, if you look since the financial crisis, if you kept your money in cash, you've probably returned less than 1% of your money. Treasury bonds, you've returned less than 5% of your money. And, it really goes to set up this gender investing gap, which is really a problem. So it is a cycle because, right, if there's a wage gap and women make less money, then they have less money to invest, or they're more hesitant to invest. And then all of a sudden it leads to, the average woman receiving less return on her investment over her lifetime versus what a man would earn over his. So it's definitely a big problem. So, you take the wage gap, you couple it with lower risk tolerance, you add in the lower confidence about financial literacy, and women will just continue to be kept down and earning less than men. So, okay, let's talk a little bit about why women are excluded and why women don't get involved in markets. And I think a lot of women get very discouraged by the headlines. And when you read any kind of business or financial news, and I think that even you as econ majors may not be so driven to read this article about the US dollar free falling, flowing a dovish Fed, and Powell urging fiscal action. I don't know about you, that does not sound like the most riveting article. And I think for most women to see that, they're like, I actually don't get one of the words in here, and I don't get it, and it's not for me. And again, it's all of the messaging and making it extremely difficult to understand, extremely difficult and discouraging to readers. And it's really a barrier to entry, why a lot of women say, I'm opting out. Okay, so the good news is investing doesn't have to be complicated, and you really don't need to be a millionaire to invest money. I think a lot of people say, well, where am I getting this money to invest? I think that you need to learn how to invest. And the one thing I would urge you to do is, first of all, to think of stocks as stories, and to start small and to focus on what you know. So what I always do is I urge women to buy a stock. Just something as a teaching tool, and it can be, and I guess I will get to this in a little bit, but if you even own one share of a stock in a brand that you care about or like, you can use that as a teaching tool, and you will be forced to start paying attention to markets. Okay, so, all right, so let's talk about where to put your money. So here are a couple of options. So these are common investment options of where you can put your money. So first is under your mattress, and you're all, women in economics. So I trust that you know that if you put your money under your mattress, it's really not a good investment strategy, right? If you have an extra $100 to invest today, in a year, if you don't lose it, you will still have $100. So definitely not a great place. The bank. So on a positive side, the money that's put into a checking account or a savings account, or a CD, it's safe, it's insured, it's not going anywhere. It can't be misplaced like the $100 under your bed. But the national average savings rate right now is around 0.05%, which means the $100 that you currently have to invest at the end of the year, you're going to have $100.05. So really not super attractive, and not a way to grow your wealth. Bonds, which I think attract a lot of women, there are multiple ways to invest in bonds. You can invest in treasury bonds, you can invest in corporate bonds. These two come with very low returns. And even though we're reading a lot right now about, the interest rates rising, and they are rising from such low rates that this is still not going to be a place where you can really make a ton of money. So stocks is really the best place for young people at your age to really invest your extra money. So it's also the most fast paced, it's high energy, and you're not always going to see the kind of returns that we saw in last year in 2020. But if you're asking yourself, did I miss out? Am I too late? Absolutely not. So last year, if we looked at the three major indices, the Dow was up about 7%, the S&P was up 16%, and the NASDAQ, which is the tech-heavy index, was up 44%. So there you can also see if you had, at the end of 2019, invested your $100, you're actually making a pretty healthy return having put your money in the stock market, especially if you had invested in tech. At the end of the year, you would have ended up with $144 on your $100. So not bad. But what I will also tell you is you didn't miss out. So again, if we go back to that 10% per year for the last century, right? You will have some years that are good, some years that might not be good and might be down. But on average, if you keep your money invested in the market, that's really the best place for you to grow and for a young investor to invest. So that said, don't invest money that you're unwilling or unable to lose, and you can't expect markets to go straight up. Those are just really important things. So let's talk about buying stocks. So people always ask me, what is the best way to start? And like I said before, the best way to start is to actually buy a stock. And it doesn't matter what it is, right? So I always say, instead of buying a couple of grocery items, instead buy one share of Campbell stock. Instead of buying that new iPhone that you might be looking at, just buy a couple shares of Apple. It is the absolute best teaching tool that I could possibly tell you, because what it's going to force you to do is it's going to force you to at least pay attention to that one stock, right? You see it's mentioned somewhere on CNBC, you start reading it. You see an article hit the paper and you start saying, how is this news going to impact my stock? When you don't have any money in the game, it's really hard to force yourself to pay attention. If you buy one share of Campbell's and, you're like, oh, okay, I see what's going on. I see what's going on at the grocery store. Now I'm understanding how the stock trades a little bit. I'm watching earnings, watching how it trades. Now I have the confidence to actually invest in another stock. So it's really that first step to learning how to invest is buying a share. Now the $45, if that stock doesn't, you made a bad bet and it's not going up and unfortunately you lost a little money. If you lost 10%, right, you lost $4.50. And I think that, most people have a risk tolerance that, as a teaching tool, you have to be willing to take the good and the bad. And, the money that you should commit right away should just be for teaching. And then I think if you have, with your additional money that you might have to invest, that's where I would pursue a more diversified strategy of looking at index funds and ETFs and other ways to own a basket of stocks. But owning baskets of diverse stocks is just not, it's not going to give you that same energy and fuel you to learn and build a passion for investing. Okay, so.
I have a quick question. Is there are we going to have a section for questions, or can I ask it now?
You can absolutely ask them now.
Okay. Yeah. So you were saying that not to invest in indexes and ETFs right away, just because they don't motivate you to learn, just when you're starting out, because they don't really motivate us to learn more about stocks?
I think that ETFs and indexes are the best place to put your money. As an investor, what I'm saying is, as a teaching tool, it's really hard for you to learn and follow how stocks trade just by owning a basket of stocks. So if you want to really understand how do events impact my stock, I think if you only own indexes and ETFs, it's very hard for a person to learn how stocks trade.
Okay, that makes sense. Yeah, thank you.
Yes, no problem. Okay, but absolutely, I would always put the bulk of my money in a diversified basket of stocks. It's just not that exciting. Okay, so let's talk about how I got interested in the stock market actually in 7th grade, and I had to pick a historical event in the 1920s and actually research it. And I chose the stock market crash of 1929. After researching markets, I became really enamored with the stock market, and I bought a single share of PepsiCo. And really, I think it was around $18 at the time. If I had held on to it, which I did not, it was up 1,000% since then. It wasn't a ton of money for a single share, but I will tell you, it really got me very interested and ended up being a great return. So I'll go back to that saying, like, your interest will fully be bolstered by owning that single share of stock, even if it's $18. So let's talk about why stocks move. So when I first started in equities, I had a really hard time understanding, and I graduated. I had this degree in econ, and I was like, this is going to be easy for me to understand markets. And I said to my boss, like, I feel like I'm missing something. Like, why are stocks trading the way they trade? And my boss said to me, well, stocks go up because there are more buyers than sellers, and stocks go down because there are more sellers than buyers. And I was like, oh, okay, like totally not helpful. Like what really drives them? So stocks are really driven by 3 things. So one is absolutely stocks are driven by fundamentals. Those are the numbers. That is what you read about, the revenues and the margins. And, it is important understanding the growth of a company through the numbers. Absolutely very important. Stocks are also driven a lot by technicals. And that's when you talk about the charts and how it's really a study of the way stocks reacted and traded in the past, and is a prediction of how they are going to trade and how they're going to react in the future. Absolutely a great way to, value and look at stocks. However, most of what stocks drive off of is sentiment. And I think that a lot of people forget that, right? It's because if it was all driven by the numbers or all driven by patterns, every professional investor would always get it right, and they don't. So if you want to understand, like, why don't they get it right, that's why they are missing the sentiment. So I used to work, and sentiment is really, it's how do people feel about the industry? What about the company specifically? What about the products? What is the group thinking about it? And if you go against what the group is thinking, and that's a lot of times what's happening with all of these Reddit names, right? If you're missing that, you're missing how the stock is going to trade. I worked with a really phenomenal footwear analyst when I was in sales. And I said to him once, I said, you're such a great stock picker. Can you just tell me, like, how do you pick these stocks? And he said, well, when I ride the subway and everybody is looking out the window, I'm looking down to see what's on everyone's feet. And that's how I pick the stocks. And I said, and I was like, that's amazing. So he said, yep. And I knew that Nike was it when I saw it was Air Jordans, all coming onto the subway. And everyone had a new pair of shoes on. And those were the new pairs of shoes that they were wearing. So I said, sometimes it actually can be that easy. And we can really spend a lot of time trying to parse through and not having the confidence saying, but I don't understand this and I'm missing this piece of information. I didn't model it out. And then he's saying, I just look down at people's feet. So is it always that easy? No. Is it easy for you to get started by taking sentiment and following trend? 100% it is. So I'll give you a couple of stock examples where sentiment's really a driver. And I think with a lot of these names, I think the good news is, you probably know a lot more than you think, and you could probably figure out the trading patterns to some of these. So first, let's start with Disney, right? We had unbelievable subscriber growth of Disney Plus, And even though, the Disney parks are still struggling, I think that most investors are saying, all right, let's look past that. And parks are going to reopen. And the streaming business is so wildly successful that in a year, it's rivaling Netflix. So with that, how is the stock doing? It took a pretty big dive in March with everything else. But if you're actually looking at how this company is doing, I think it hit an all-time high today, which is pretty unbelievable. And why? People are really excited about the future, because the second there is a vaccinated world, they think that people will continue to stream. They'll continue to keep paying for it for their kids. And they're now going to go back to the theme park vaccinated and feeling good. So that's why if you look at Disney shares, they're up 30% over the past 3 months alone. Okay, then you look at something like Zoom. Zoom replaced, we're using Zoom right now. It became a verb. Nobody knew about it last year. And now we do, our drink events, all of our social things, everything that we do is on Zoom. So why is this happening? So just by understanding sentiment, you could probably understand what's been going on with Zoom right now. So since the vaccine started rolling out, the stock has been really struggling. And investors truly believe that once people are vaccinated, we're going to stop doing this as much. We're going to start in person again. It all really makes sense that when we resume to normal, will we use Zoom? Absolutely. Will we rely on it to propel our lives? Probably not. Zoom actually reported earnings last week. And if you actually just looked at the numbers were phenomenal. The company is growing. The revenues are, it was up, I think it was like 380% year over year in revenues. The company is really growing well. Did you have a question?
Yeah. I did. So you were explaining to us how NASDAQ is an index investment and Zoom falls under NASDAQ?
So yeah, so now it's part of, yes, it would be, it's a NASDAQ listed stock in the NASDAQ index, yes.
Okay, so if NASDAQ falls, Zoom would fall with it, right?
Well, it's a composite, so it's all made up. It's part of the reasoning of why it would fall, but it can still go up with some of the pieces of it going, right? Just because some of the stocks go down doesn't mean that the whole index is going to go down. It's a component of it.
Okay, thank you.
Yep, no problem. So if you look over the past 3 months, Zoom is down 24%. And I think if you actually step away and say, does that make sense? It absolutely makes sense to me. So, okay, here we go. So this is just, I think we talked a little bit about single stocks. This is just, if you're, the single stocks is helping you engage and learn. However, one of the best ways to really invest your money, which we talked about, is these index funds or ETFs. So index funds and ETFs really involve investing in an underlying benchmark index. So you can't really invest, you can't buy the NASDAQ. You would have to buy an ETF which mimics the NASDAQ, right? Because the NASDAQ is a composite index. So to buy it, you would buy something that looks just like the NASDAQ index in an ETF. So that's and I'm only going to say this because you are interested in the NASDAQ, that's the QQQ. And it trades kind of like a stock, even though it is little bits and pieces of the NASDAQ index, if that makes sense. So now if you would buy something like the QQQ to own the NASDAQ, you would have a little piece of Apple, a little piece of Microsoft, a little piece of Amazon, Tesla, Facebook, Google, and 94 other names, right, if you bought that. So hopefully that makes sense. So let's talk about markets and how we're doing year to date. So, I think that we were going gangbusters for a little while. I think there was so much optimism that was driving this whole rally back from March and April. a lot of excitement about how the world would change when the vaccine would roll out. The political environment definitely was weighing on how the market traded. There was a lot of optimism about, a Democratic president coupled with a split Congress, which is what people really wanted. The stock market liked any kind of gridlock because then things can't change as much. So there was a lot of optimism about that drove the markets. Then there was all of the optimism about keeping rates low for so long, which is a big driver of markets. And one of the reasons is if people don't have great other investment choices to make, right? If you can't really return any money by investing it in the bank or in the bond market, the money goes to the stock market. Also, another driver that we saw, which is really interesting, is a lot of people that got their stimulus checks. Some people did not use the money based on what you would think they needed the money for, and they actually took it. A lot of young people got stimulus checks and they put it right back into the stock market. So all of those things really led to this incredible stock market rally. And it was a lot of factors at once. And right now, what we're starting to see is that NASDAQ, going back to it, that tech heavy index, people are saying that was what really drove the market out of all of the fear in the whole pandemic and what lifted the stocks higher. But this, as we said, the NASDAQ was up 44% last year. We're seeing this rotation out of some of those tech names and into things that do a little bit better in a rising rate and potentially inflationary market, which is energy stocks, financials, industrials, and that's where you're seeing a lot of the investor rotation right now. Okay. So why should you care? So this is something I love to talk about because it's not really just about investing your money, right? It is great to invest money. It's great to make a return. But I think one of the most important things is building a foundation so that when you're presented with opportunities in the future, you don't miss out, right? So your future workplace may offer you options for a 401k. Do you do it or do you opt out? And I would say absolutely do it. Your future workplace might be a publicly traded company. Do you understand the stock? Do you understand, what is the company talking about on their earnings calls? Are you part of those divisions that the company cares about and they're really investing their time? And you can tell a lot by listening to calls like that, finding out what do investors care about when looking at this company and am I part of it? Right? Those are really important things to pay attention to. If you work for a private company out of college, who are the public peers? What are they doing? And what can you learn about your own company by seeing what your public peers are doing? Because all of that information is publicly available. So I see that so many people don't pay attention to things like that, and it is critically, critically important to do so. So even if you're saying, I don't want to invest $1 of my money, nor do I have money to invest right now, I'm a college student, I would tell you start paying attention to how things trade, because even taking your first job, it is incredibly important to understand how that company or its public peers trade and what drives them. Okay. So, and if you do want to invest, I always like to leave people with a few tips on how do you even find money to invest. And the best place to find money is always money that you already have with unused subscriptions. And I think we're all victim to this right now, of things that you probably are paying for that you no longer use. And please, I ask you to please check carefully and stop using them. This fall, I actually, I thought that somebody in my family used this Kindle subscription for $9.99 every month, and I never ever asked. And I finally asked my kids and my husband, I was like, is someone using Kindle? Who's downloading these books? And I found out that we downloaded the thriller Captain Underpants in 2016, and I paid $480 for that book, because if you look at all the months of paying for the Kindle subscription, that's what it amounted to, which is kind of crazy. I was able to luckily I was able to call Amazon and tell them, and they saw I didn't download it, and they did refund part of my money. But it's just wasted money that we probably make these little mistakes all the time, or like things that we signed up for during COVID and we didn't really, we really stopped using. So we have to be very careful about that. And then the other thing that I always love to do is I would take out money out of every paycheck I ever got. Before it even hit my bank account, I didn't even know about it. And out of college, maybe you can start with $20 from every paycheck that you never see. You can't spend it. I found that to be incredibly helpful. And as I got more senior and I got more money, I took more and more money out, and it automatically withdrew it from that account and put it into a different account. And I used that money to invest. I thought that that was incredibly helpful to me. And I ended up using that to help me buy my first apartment. I was able to save that money and invest it. And then the third thing is, pay less for everyday services. It kind of goes back to the first thing about just, spending money and not paying attention to it. I always tell people though, don't give up on things that you love. Like you're not going to grow your wealth by saying, I'm not going to drink coffee out anymore. Like if that's what you love and that's what you want to do, go for it. There are other ways that you're probably, that you could probably be more careful, and you don't have to give up on everything that you love. So just on brokerage accounts, and then we'll go to questions, like open it somewhere. I think they're all really good right now. They're all very competitive. I'm a big fan of number 2, Schwab, and I have my account on there, and I feel like their tools are amazing and so easy to see. I think a lot of younger people prefer Robinhood. Don't buy things on margin. Be very careful. Only invest what you have. So if you're borrowing a lot of money to invest, please don't do that. And that's really it. So this is me. My website is theuptick.net. I publish every Saturday morning. So hopefully you'll join our journey and start following stocks with us. And you can follow us on Instagram at theupticknyc. So I'm happy to take any questions about my career path, about investing. I know we only touched on some topics, but I'm happy to be helpful in any way I can. And I love questions.
Thank you, Jamie. That was great. I can speak on behalf of all of us and say that we appreciated that. There were a lot of things that I learned, and I don't know, like in the middle of your presentation, I became motivated I'd probably invest after this. I'm not going to lie.
Good. I actually love, sorry, I have to go to my outlet. So I love hearing that. And that makes me so happy because we need more women to invest their money to actually have any kind of parity with men in the future. So I think that's fantastic.
I have a question. So as you were saying, like a lot of women don't tend to invest because, there's a lot of risk involved, and I feel like I'm generally a very risk averse person. So how would you say, I don't know, what kind of advice would you give to someone who's incredibly risk averse about like getting invested and getting started and, taking that first step? Because I think for me, that's like the mental block is like, but what if I lose? Like, it's not about like, what if I win? It's about how much I could lose if I do start investing. And do you have any advice on that? Or
Yeah, absolutely. And honestly, it's the hardest advice I will give you, but the most attractive things I find, like today when the market was really down and people right now are in this anti-tech sentiment, right? They just want to hate technology stocks. I actually truly believe in tech as a sector for the long term. I'm definitely not a day trader. I don't want to own things for this year. I want to own things for the next 10 years. So do I truly believe at my core that people are going to continue to buy Apple products and invest, right? I'm just giving this as an example. I'm not telling you to all go out and buy Apple. But I'm saying I actually truly believe in this company. So on days like today where I see that everyone's hating it, I will actually go in and buy a stock like that I believe in the long term. And if it goes down for the next month or the next 3 months, I actually don't care because I'm looking at the next 10 years. So I think if you are trying to shift, this is not about competing at, next week with who had the best returns from the week before. Absolutely not. I don't believe in investing that way ever, but I believe in investing for 10 years. So if you're going to check your stock portfolio every single day and you're going to get upset about, losing money like that, you actually can't do that to yourself, right? You're not a professional investor that's getting paid out every year just based on what your returns are. So you can't think like that. So you have to buy things that you will be happy owning 10 years from now.
So like thinking more in the long run definitely helps rather than like just thinking in terms of short-term gains.
Yeah. And you're saying like, I'm not taking this money out next year, so that's okay. And having the confidence when there is something that you really love and believe in, when everybody is running, is that the day that you go in and say, you know what, I would actually, if I buy more at this price, your dollar cost averaging down a little bit, right? So like you can think of it that way, that now I own more shares at this middle price rather than owning, you know what I'm saying? Rather than owning. So if you buy things at $100 a share and then it fell to 80, right? You kind of got everything for 90 if you buy the same amount of shares, right? So your dollar cost averaging down on days like that. And if you like things for a long time, then I would say do it. And people shouldn't be day traders. And I think that a lot of young people today feel like, oh my gosh, I can make thousands of dollars in GameStop if I were just in it. Like that's really not, that's more gambling than investing. So my advice is not to gamble with the stock market. My advice is to put your money in for a long time and try not to get upset about market fluctuations. The best time to invest this past year was when everybody was running for the hills and saying like, oh my gosh, COVID, this is horrible. Sell, 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 sell. If you would have stepped up and say, actually, I believe in the long term, right? If I believe in the long term, like I can now buy, the Dow was at 18,000. I mean, it was, right? It was at 18,000 and now it's at 32. So 31, right? You could have actually gotten it there. Scary to invest.
I mean, yeah, but I was also thinking, how in the US, like the federal interest rates are so low also. So it's not like we're making a lot of savings for the future by putting our interest right now is at like 0 point something percent. It's so low. It's not really a long run investment anymore.
They're not
especially because
there aren't great alternatives right now for your money.
Yeah. So, I mean, I guess I could also see from that perspective that like saving isn't giving us any returns. And even if you're not like investing in very high performing stock, that's still more than you would be getting if you'd put your money in like a savings account at like 0.5%.
That's exactly right. And bonds are the same. And even though, we're seeing interest rates start to rise a little bit, they're very low.
Hi, Okay. I have a few questions also. So first of all, are we able to add you on LinkedIn or anything?
Yes, 100%. I'm Jamie Easton.
Okay, perfect. And then my other question was, I opened up a Charles Schwab account also. Yep. And I did start to invest in some money, but for me, it's really hard to like read the stocks and exactly what they mean. And I was just wondering if maybe you could like walk us through that or kind of just like explain that to us.
About what do you mean?
Like how to actually read the stock.
Like read the chart
Yeah. Like the dividend yield and all of that stuff, like what that actually like means and stuff.
Sure. Oh, like how, when you look at if you pull up a stock, hold on, let's see. Let me see if I can see what information they give you. You know what we could do to make this actually good? Maybe Sophie, maybe this is something that we can actually take because there's so much information that I feel like it would take a long time to like read, because I feel like there's a lot of good information that you can glean from the stock chart and the volume and how many shares it trades and the and the float and how much, right? There's like so many things that we could get into here. I'm wondering if we could, Sophia, maybe this is something that we could actually do and make something like fun, like a little series of how to read charts. Maybe we'll do something on Instagram for you to make it a little more fun and exciting, because I feel like we have so many topics on there, right? You have market cap, like there's so much information that I feel like we could talk about right now.
Okay. And then like, what are your thoughts, I guess, about a Roth IRA?
I think that they're amazing. I feel like you should absolutely have one. Yeah.
Okay.
I think saving for retirement, this is something that Sophia and I talk about all the time, and Sophia is on my team, like starting to think about your retirement now, even though it sounds so crazy, it's actually a very smart thing to do. Especially as you start a job and start being able to invest tax-free and start earning money and putting your money in the market for something that's, long-term and that you're not paying taxes on now is fantastic. It's a great way to start saving your money.
Thank you.
I had a question about the influence of the internet in terms of stocks, buying stocks. So we know about the whole Wall Street bet type of thing going on, but that definitely was like a very huge, like sudden going up and then falling down. So you told us the example of look at the shoes, like everyday life, what are people like starting to get interested in? How, to what extent do you think like internet would be similar to like, or I guess like be able to like parallel that type of influence in like helping you decide?
Yeah, I think that what it's doing is it's sometimes changing the group think and the sentiment. So when we talk about, what is influencing stocks and why, I personally would not buy GameStop. And the reason why is I don't actually believe in the underlying business, right? I don't think that is a place where, if I'm going with my 10 years, do I think that 10 years from now people are going into GameStop and buying their video games? I don't think they are today, right? So this is like this is something where a new board member has come into the stock. There are days where the stock is trading on tweets from Elon Musk. It's trading on tweets from one of its board members posting an ice cream cone and a frog. It's like stuff that I actually don't get. This is not what should drive stock, so I don't want anything to do with it. That's not to say that people haven't made a lot of money. People have also lost a lot of money. And I just think that the internet has exploded this groupthink and sentiment, and it's really hard when sentiment has shifted in a direction to you could get rolled over by that groupthink. I don't think that happens as much with stocks that are more established and have really good fundamentals. Because I will tell you that if someone gave me the example, if like Caterpillar, right, an industrial, one of the big industrial bellwethers, if Caterpillar stock was up 150% in one day on no news, the management company would be out there talking to investors and trying to understand it. And, with these stocks, the company's like, oh, okay, great. I just made a lot of money. I have no idea. Like it just would never happen in certain companies. So do you want to be on the other side of groupthink? Absolutely not, because you could get really hurt. I think it happens more with more speculative trading than with more established companies. I couldn't see that happening to an Apple.
That makes sense. Thank you so much.
Yep, absolutely.
I guess this question sort of follows, but would you say you believe more in like the efficient market hypothesis or like the random walk hypothesis?
I do think that I believe in efficient markets, and I think that while there are absolutely times of chaos and frenzy and things that happen, I do think that markets and pricing is more efficient. And I think that there are definitely bubbles that happen for various reasons, I think that the rationalization happens and the price discovery ends up settling at a place that actually makes sense.
Just out of curiosity, do you invest in cryptocurrencies?
You know what? I do. I have a very small cryptocurrency investment in Bitcoin. I don't, and I actually wrote about NFTs this week. I don't own any NFT assets, and I am not planning to right now. But I do it just as a play because I think it is fun and exciting to have a little. You can actually buy a little piece of Bitcoin if you want to. You don't have to buy a whole Bitcoin just to see what happens. I think it could be really exciting to watch and follow. But if I lost my entire Bitcoin investment, it would not make an impact on my life.
That makes sense, because I was listening or like just reading about Bitcoin a little bit, and it was basically talking about the whole sentiment behind people investing in Bitcoin is also like looking at the future of like what a cryptocurrency could be, how useful practically it can be, and just like people believed in it, which is exactly what you were talking about in like investing in stocks. So just out of curiosity, thank you so much.
So I do. So I'm very transparent of what I buy, and I did. And honestly, I bought it also for myself as a teaching tool to learn more about crypto investing. Right. And I'm very interested in this whole NFT market, and which is more Ethereum, and I'm interested in Coinbase. I think that's an interesting one, but nothing to the point where I think some companies right now are putting 1% of all their cash in Bitcoin, which you're starting to see a couple companies talk about, like Square and PayPal. Would I put 1% of my net worth in Bitcoin? I absolutely would not, but a little bit I think is fun.
In that line, like, what do you see? I actually just attended like another like panel meeting the other day that was about like Bitcoin and the rise of Bitcoin. So what are some future trends that like you can see in the market that you think are like worth buying into right now? So as you know, like GameStop, I totally agree with you. I think it's like a brick and mortar store, and I don't think it really has a place anymore, especially with how much we buy stuff online. Like just the other day, I bought all my Nintendo Switch games through like the Nintendo app on their like on the Switch. So I was like, I'm not even buying physical copies of games anymore. So I don't see the point of GameStop. So what kind of like stock or companies and trends do you see are going like obsolete now, and what kind of stuff do you see is like on the rise? Like as you saw, like COVID tech was on the rise. So do you see any trends that you think are like interesting or
I mean, I still truly believe in the future of I think that e-commerce is here to stay for a long time. And I think that you have to start thinking about the world is, how do you think it's actually going to look like after COVID? And I think that the best way to actually invest is to put, to think of yourself a year from now and say, what am I going to stop doing? And what am I going to continue to do? What changed me? And I'll never go back into another, I'll never shop again at another X store, or I'll never go into the Gap, or I'll never go into the Macy's again. But I'd continue to use Amazon every day because I do it now. So like, what are the trends that will actually stay? And do you think that if this event were next year, would we do it this way?
Do you have any resources that someone who's like just starting out with investing and thinking about stocks could refer back to?
So besides for the Uptick, in terms of just getting your basics, and I tell everybody this because I actually really truly believe that if you keep, I watch CNBC every single day religiously. I love CNBC. If you actually keep it on in the background sometimes, and then you pop in whenever they're talking about a stock that you're interested in or a name, or then you just watch at those few moments, I actually think you'll start to, you hear the language, you hear people talking about it in the background. I think you'll pick a lot up. So I would tell you to do that, 30 minutes a day, keep it on in the background. And when something pops up, my favorite show happens to be at 9 to 9:30 every morning with Jim Cramer. And I think that's, and I don't know how that works with Squawk in California, but whatever time Jim Cramer and Squawk is on, you keep that in the background, and then you go on about your day. And then any names that you hear about, you also should look up and read. Like if someone is out and talking about a certain stock, go home and start reading articles about it or get involved in the conversation. I think all too often women opt out of the conversation because they feel like, you know what, I don't know enough to actually have a voice and have an opinion. And what I will tell you is that's absolutely not true, because of if you believe that stocks are really driven by sentiment, people can tell you all the numbers. They could be so smart about a stock that you think they're smart about a stock, but you probably have an opinion about a brand or what you're seeing that you can add and contribute to the conversation. And then you'll just gain more from being part of that conversation. Right? If someone's talking about, so if someone's talking about Apple and you're saying like, oh my gosh, I would never upgrade. I'm not seeing anybody else do it. I'm keeping my same phone. I've had it for 4 years. Like, you could be part of a stock conversation, not by saying anything about the financials of the stock and just about trends, and you'll hear what they're saying and you'll learn.
Do you have any recommendations on getting into the industry of, would you recommend internships or certain courses that you should take or information you should know beforehand?
So one thing I will tell you is now is an amazing time for women, which is great. And I think that the financial industry in general really wants to support and develop, retain, and engage more women. So I think that you have to capitalize on this time that, I think people really want to do things to invest and grow their female talent. So I would say to just be very vocal and try to get involved. And there's so many ways to do it. And I would say the other thing is that people ask me a lot about how, your first job and finding an internship. And I would say, go with a great company and don't worry so much about what your first job or what your actual role is, because a lot of times you will learn about different jobs that you will have no idea about when you're in college. And it's hard to know that they even exist, or they don't hire into it out of college. But get your foot in the door at a place that you really like, and then you can figure it out from there. The hardest thing is, walking through the door. It's not as hard to move around once you're inside. But I'm hoping that you also have, there are probably a lot of different banks that are hosting diversity days and things that they're doing. Like, I would join them all, even if it's not, for a job. It's just to get to know the company and learn about them.
Thank you.
No problem.
Are there any more questions?
I have one. I don't know if you covered it before, but is there anything that you wish you knew early on in your career that you learned throughout your journey?
That's a really good question. So something that I learned throughout my journey is that and I would say this especially as a woman, and we'll do this to close out International Women's Day, but you really do have to ask for what you want, especially as a woman. And I felt like I was never, ever offered a raise or a promotion or anything without actually asking for it, right? And you can sit back and do a great job, but if you don't self-promote yourself, it's actually really important to self-promote, especially if you go into a Wall Street job. And without it, it's really hard because men do a much better job of self-promoting, patting themselves on the back, saying, oh my gosh, I just killed it in that meeting, or I just, without me, this wouldn't have gone as well. And it's not that you have to do it in a bragging way, because you definitely don't, but I would always keep a list of all of the accomplishments and everything great that I did that year. And I would have no problem at the end of the year reciting it all back in my review and making very clear what I wanted and what I expected. Because what you don't realize is that companies don't want to really disappoint you if they don't think you'll be disappointed, but they're never going to give you something if they feel that you're just content where you are, right? So if they think that you're very happy making what you're making and you're not asking for it, why would I pay you more? Why would I pay, if my babysitter, if I thought that she was fine making what she was making, she never asked me for anything, I'm never going to give her more money because she keeps showing up and she seems happy. But if she said, you know what, I've been working for you for 2 years and, it would really mean a lot to me if you could pay me a little, right? If you don't ask me, I'm not going to give it to you. But if you ask me, I'm going to say, you know what, that makes sense. Absolutely. So you don't get what you don't ask for, and you have to really have a voice. But that is a good question.
Thank you for that. And I think that there are no more questions left.
Right. Well, please reach out to me on LinkedIn, sign up for our newsletter, and we will absolutely try to do more on Instagram to highlight, how to look at stock screens. And that's something that we'll definitely look at. So follow us on Instagram too. And thank you.
Thank you for coming today. We really appreciate your time, and all your answers to our questions were phenomenal. So thank you again.
Good. Thank you so much for having me, and happy end of International Women's Day.
Yes.
Okay, thanks.
All right, bye. Thank you.
Thank you so much.
Thank you.
Thank you.
Also, I love the logo. It's really nice. Clean.
Oh,
sheet. I
thank
love
you.
it.
Thank
Have a great
you. I love hearing that. Bye.
Hey, Kate. Bye, Kate. Okay,
Are we staying on or are we?
no, you're fine.
Okay.
I should end this recording. Bye.